What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart, along with the altcoin market, the stock market, the XRP price chart, a lot of stuff, as today is March 31st. So that means it's the last day of the month. It's the last day of the first quarter of 2025. Probably see a lot of volatility out there in markets as it tries to decide how to close the monthly and quarterly candles. And so in this video, we're going to take a bigger look on what's going on out there in broader markets and tie that all into crypto. Now, I just published my newsletter over there at blockchainbacker.substack.com, where I've spent a lot of time diving into macro, and in this one, incorporating a lot of AI deep research into it on what its thoughts are in regards to some type of rotational market. Have mega caps already topped in the market? When breadth gets this poor for so long, does that usually indicate that there's some type of rotational ending that happens in markets? And of course, one of the reasons why we look at this so much, and it's been such a topic for the last 2 years, has been with the conception of how the cryptocurrency market works. That everybody's in this belief that there's these block reward halvings that happen, and that's the catalyst that sends the crypto market soaring off into the sunset. But there's very clear evidence that it's tied to macro expansions in the United States stock market. In that this time has been different in that every 4 years at the exact same time, we see an expansion happen in broader markets. And that this has been the first time where we don't get an expansion happening, but the breadth collapses in the United States stock market. It becomes very narrow and everybody piles into the same trades, right? Microsoft, Apple, Amazon, Google, Nvidia, etc. Now, for years, this has been a highly debated issue, but the easiest way for me to argue it without having to argue it is to just simply place the altcoin market right on top of the Russell 2000 to show the peak of November of 2021, all the bottoming here of 2022 and 2023, the recovery of 2024, and then again, another peak right here in December of 2024 with the Russell 2000. So it seems vitally important to try to figure out what is happening here in the stock market. Is there any hope of there being a recovery happening here in the Russell? And if not, where do we start seeing levels that would say there won't be a rotation and things are pretty bad? Fortunately, I'll give you a little bit of a spoiler. After doing a lot of this AI research and deep research, it also agrees there's a higher probability that we likely are seeing the popping of the mega caps or the Mag 7, and that their tops actually are already in, that the massive rise that we've seen in gold is investors seeking during moments of uncertainty. However, the AI deep research models do believe that the probability is higher that in a recovery, we actually would see something like this over here in the Russell and in the mid caps that would do something kind of like Bitcoin did back in 2021, where it goes off and finally just barely gets up there to hit its 4.236 extension. Again, these things seem to be vitally important based on how we see this market react, or the crypto market react, in regards to what's happening in macro markets. So it's something I've paid a lot of attention to. In the event that we actually see weekly candle closes below 1,950, the odds go down that we're going to end up seeing that. If we actually see a weekly candle close down here at 1878, odds decrease even more. And well, if we get ourselves all the way down to 1795, then it's essentially the line in the sand, along with the AI models, that there will not be a rotation that happens throughout this market. And that rather than us just backtesting some supports over here, like so, where this thing just ABCs back down to the support, ABCs back down to the support, that it actually places us further along, like somewhere in here. And that if we start taking out these levels down in here, even though it doesn't necessarily mean we're going to go in a straight line down from here by getting here, you could still waddle around in here a bit. It does imply it's essentially the line in the sand where we're watching live the popping of the United States stock market and all facets of it. So long as we have weekly candles still above 1,950 for the Russell 2000, models still imply there's a higher probability that this actually is what you typically see, where breadth collapses in markets. It all consolidates into mega caps. And then once the mega caps correct, and the market finally recovers, it actually does happen into small and mid caps for kind of a last hurrah of markets. But things like I've been talking about for years now, being like, this seems like an equity top that's being worked out in here. The AI models all agree. What we are witnessing is late stage stock market cycle behavior. Of course, that's not here to like scare you and terrify you. I think I've probably said that for a very long time. But the idea is to try to figure out, well, how do late stage cycle behaviors behave? Because what we definitely know is that this wasn't expansion like everybody expected from 2012, 2016, and 2020. So check out the newsletter for more on that. It's like a 48-minute audio recording. It's a long one. Lots of AI stuff in there. The spoiler, the good news is the AI models do think this is the peak of the United States stock market. But typically as these finish and these mega caps kind of finish this leg of correcting, we tend to see a rotation happen into mid and small caps. And hate it or love it, have your world flipped upside down on what your beliefs are in the crypto market. That is the thing that we tend to need. And we spent a long time preaching about that stuff back in here. And then once we got over here, we finally got the breadth to open in the US stock market. We saw the Russell open up, and then we saw crypto roar with it. And of course, that's the moment that we saw XRP take off as well. And well, ever since the stock market's been stalled out, so has XRP up in here. As for Bitcoin, obviously last week we could see it in there on the daily indicators that we were starting to see evidence of things starting to try to bottom themselves out. Like I said, at the end of the week, I'm like, I just don't have anything profound to say on like anything I'm looking at that's screaming to me that we're either going to move up or move down or do anything significant at this moment, except for the fact that we're finally exhibiting some type of behavior after really just being Goblin Town ever since mid to late January. So strength indicators improving. You can see it's pulling back now. It still seems like a bottoming process to me. Also, one of those charts we were looking at a lot last week was SWE discussing, it looks like we're starting to see things start to pop up in regards to strength indicators. However, being at moments like this, that still it could grind out in a while. And I can tell you when we have moments like that, or I'm seeing that like on the horizon, there's just not a lot to say. That's like overly exciting for YouTube. Until proven otherwise, I still look at it through that lens. As for things like XRP, in regards to the price action that we've seen during this pull down as well, I'm really kind of wanting to see a bottom come in here pretty soon on XRP to maintain the view that I've had. And all examples where I've shown you things like Ethereum or Litecoin or the altcoin market or Cardano, that it's incredibly common to have these attempts to break through the all-time high followed by big knockbacks happen. But the things that consistently happen throughout here after things start to settle is just series of higher lows. This is just what we commonly see. Oftentimes people using trend lines are going to get tricked by these, yet it's still going to be a series of higher lows. So in here, still continuing to maintain above that $1.88 or $1.89. In the event that we go below $1.89, my picture gets a little blurry. There'd be two things that would kind of be happening here in that event. It'd be one, that we do set another lower low, and that we're also going below the peak of 2021 again. So if we go below $1.88, my picture will be more confused. I likely will finally take like a 20% profit take on my entire XRP bag, which represents my entire initial investment. Still leave 80% of it in, but I'll get my initial investment out. Will I end up selling the literal bottom? Maybe, but the picture will be blurry for me in a moment like that. And if it's a little bit blurry, then it'll be time for me to just kind of take a little bit of action. One coin that is already kind of showing some signs of would be things like Hedera Hashgraph. In this move that just recently happened overnight, you could see that it has broken down back below its previous all-time high. The candle has yet to close there for the day. It's also March 31st. A lot can happen before the end of the day is over. And however, the stock market's going to try to close itself, and the crypto market's going to try to close itself to finish out the month and the quarter. But as of right now, you could see that move right in there also took it below the 200-day moving average. So two kind of things were lost over here on Hedera on top of this price level, which is the 200-day moving average getting lost along with the previous all-time high. These things aren't guaranteed to be like, hey, you go below the 200-day moving average and then it's lights out. No, you can look back here to April. You can look back over here to September. You can look back over here to January of 2022, which it did signal it was in a broader downtrend, but it didn't mean it didn't pop back up. You can look over here to June of 2021 and here to July of 2021. Prices still rallied off those levels and kept going. Also, we can just look at that price behavior on how that acted in there, and you can see that too. Price behavior relatively similar still to this point, and even with the amount of time that's been spent in here, it's relatively similar. But this is one that did just trigger partial profit taking for me for this whole rally by taking out both of these levels at the exact same time. Again, is this going to be a scenario where this thing rallies up? My profit take ends up being at the literal low. Very possible, but I had two things break in there at the same time and initial investment taken back. Again, if I was fully convinced this thing was going to break down to the complete ground, and if we were seeing things like below 1950 weekly closes over here on the Russell 2000, I may have an entirely different view on these things and maybe take more off the table, but I just don't have all the elements in place for me to be like, oh, yep, we're doomed Goblin Town yet. XRP is still totally above all these things. Nothing's broken in here. Hedera, that's a questionable story. Bitcoin, obviously not broken. And sweet, still just all these same things happening in here. And while we all just want prices to go straight lined up, these are things we just talked about last week, right? Whether we're going to have to enter this phase next. And obviously the answer appears to be yes. The thing that I am hoping to see, at least over here on the XRP price chart, is to see, of course, this low be able to hold over here at $1.89 from March 11th. In addition, I see things I'm familiar with in here, like 1, 2, 3, 4, 5s rolling back up to wave 4 within wave 5 and the final push down in here. So if we can finish off the month doing something like that, well, believe it or not, that would actually turn the monthly candle green for XRP. And after everything we went through this month, with it starting off, coming off of this craziness, and then right when we get into the beginning of March, we have the Trump stuff, right? Then boom, market takes everything back. And then we have SEC lawsuit stuff ends, takes it all back. $2.14, which is really just right there, makes the whole month green, believe it or not. But I definitely want to start seeing higher lows get into place at this point. We start seeing lower lows. Then we start saying, well, we're kind of below these levels. These are the levels that have been holding. We've done this one twice. Like, yeah, we did slam it, during like a super massive liquidity situation that happened throughout the market, right? That's kind of like, it could just kind of land anywhere when the liquidations are hitting super hard. But these have definitely been levels that have been supportive, and it's done it a couple of times now. So we start going below $1.89. It brings into the question, we seem to be trending down. Then we have to start looking for, well, where are we gonna find some supports at? And we could make a million cases. And I don't like coming on here and being like hedging all my words and saying we could do this, that. See, I told you, because I covered all my bases. Right? You could argue that the 200-day moving average at like $1.77. You could argue the market cap 2021 high, which is at like $1.50. Then everybody's going to argue, oh, well, here. Oh, no, wait, well, here. There's so many different places, right, that it just becomes kind of blurry. So what I definitely want to see for me to have just like a clear picture is just continue maintaining that $1.88. If it drips below there, I'm going to have to cut 20%. It's the first time I'm selling anything to get it out of the market from XRP. It'll be my initial amount. And you know what? If I end up just being the G who sold the bottom of it, that is what it is. And so like one other thing on it being like, it would be more confusing to me if we went ahead and set a new low below $1.88, is that these ideas would start coming into question as well too. Because I would be thinking that we would just continuously be climbing higher lows to just continue going in here. And up until this point now, we still have been. These are higher lows, all working their way up in here. But if you go take out $1.88, then suddenly we are now setting a lower low. We're setting a lower low. And like I posted a couple of weeks ago, back in early March, going below those prices, the picture just gets more blurry and more murky. And it'll just kind of be one of those back to the drawing board things. As of right now, as we're starting off the day, I don't think that's going to happen. And this is really exactly how prices behave when they move below support levels, is that they'll slam back into them and set a new low, and then they revert right back up to them and go back above them. So I don't think it's the case. But I definitely have to go through like the thought process of what if it did happen? What would I think is going to happen next? How convicted am I in that? Would I be a little bit confused? And I would definitely be a little bit confused if we went below $1.88. And so I have to try to think a couple of steps ahead, because as of right now, it's just a concept of continuously making higher lows, climbing a wall of worry. And if there suddenly become new lows, then the picture just isn't perfectly crystal clear. With something like Sweet, right? I have a pretty good idea on what I think is going to happen in here. But in something like H-bar, not entirely sure. These are daily candle levels that are happening in here. And you're in an area that could end up being a supportive level in here. And I like the double tap. bull flag, breakout, backtest happening in here. Very reasonable to think that's the low. The problem is you just took out the previous all-time high and you took out the 200-day moving average at the exact same time. So you have a couple of mixes, right? Like if this 200-day moving average was coming in down in here, you'd be like, oh, look at the confluence that's happening in here. And if the previous all-time high sat right there, you'd be like, all right, that's cool. But those mixes make the picture a little blurry. But like to even give you a little bit of an example in here on something like Bitcoin, right? We go back to last year with Bitcoin. Notice when the low comes in here, this is the zone at which it comes back down into, right? A little bit of a double tap happening in here. There's a bull flag on top. That was the supportive level that ended up being the marker. And of course, it does dip below the 200-day moving average when it's doing that. So these aren't hard lines in the sand. It's just, is the picture 100% clear with it taking it out and with it taking out the past all-time high for the market cap? No, the picture's not entirely clear. So again, like I said earlier, if we had confluence things happening where you had like the Russell 2000 making a weekly close below 1950 and then these things are happening at the same time, yeah. But, we can argue new price levels all the way down, all the way down, all the way down until we're like, that's the one. No, that's the one. That's the one. But two things happened in here, but it's not like it's unreasonable to think that there could be a pause happening in here. And that's just it. That's the break. This happens all the time where you'll do these things. It breaks down, looks like it's capitulating, and then boom, we're right back up here in a matter of no time. We'll just need to see the reaction here in the coming days to see how it does behave. So as we head into this week, it's going to be about watching to see how this Russell can react here in the coming days. Today is going to be the end of the month. It's going to be the end of the quarter. How are the markets going to close themselves out? One of the big narratives out there is on April 2nd when it comes to tariffs, right? That's where the market is supposed to be more confident on what's going to be happening with tariffs. So we're probably going to hear tariff news and all that kind of stuff happening here in the coming days. That tends to move markets at the same time. As we head into the week, things are not broken in here. XRP still holding and Bitcoin's still holding. And believe it or not, the Russell did even close last week, still on top of these weekly closes. Now we're going to see how much is this dip going to happen in here. Is this like a 1, 2, 3, 4, 5 where we just did the roll back up to wave 4 within wave 5. This is our last push to scare the crud out of the market, only for it to reverse and we get back here in a matter of days, marking the low. So kind of an intense moment in markets happening right now as we go into this, and lots of surprises can happen as we close out the quarter. So we'll check in on it tomorrow and we'll see if we've gotten any type of crazy reactions as they close out the monthly candles and any type of crazy reactions to kick off April. Otherwise, you guys can check out the newsletter over here at blockchainbacker.substack.com, which I just published. It includes a 48-minute audio voiceover recording that I recorded as I read through the newsletter and go through the charts. This one was very interesting to me. As you guys know, we've talked a lot about this non-expansionary environment happening here in broader markets. How do tops of equity markets tend to behave, or even crypto markets like we see with Bitcoin and the altcoins back in 2017 where breadth really collapses? And it's one thing for me to kind of have these theories on them happening, and then we're kind of seeing a lot of that stuff play out where the breadth just never opened, and what does it actually end up meaning? And I've of course come up with all my own theories of like rotational tops is what we've seen when these types of things happen, when you have major indexes still continuing to go higher, but like the breadth is not there. What usually happens next after that? And my thoughts have been that, typically we see like breadth open throughout the markets. So, you've got Grok, you've got ChatGPT, you've got these deep research things that you can do in there now, where rather than it just like spitballing out an answer really quick, you can plug in a lot of these ideas to it and have it scour resources and add dozens of resources in it to make a case for or against, add probabilities to them. And that's one of the things I did here. And rather than just doing it from a chart perspective like we typically do, it plugs in a lot of the macroeconomic conditions that are happening out there, right? When it comes to, uncertainty or gold or interest rates or hedge fund behavior, right? And tries to formulate a thesis based on that. And so that's what this newsletter is really about, diving into it and incorporating AI into it at the same time. So you can check that one out over here at blockchainbacker.substack.com. There's a link in the description of this video to the newsletter at blockchainbacker.substack.com. Otherwise, have a great day, guys. Last day of March, last day of Q1. We'll see what Q2 has in store for us, and I'll check in with you tomorrow morning. But all right, that's it. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick me up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.